Let's go to Germany. First off, read this disclaimer carefully. Remember, of course, to like, subscribe, share, and comment, because then all the kinds of amazing things happen with the YouTube algorithms. Okay, so Germany can be found here in Northern Europe. You can see the distance from the 52-week low, 52-week high. Germany is actually outperforming the S&P 500. This is actually pretty good, even in terms of the distance from the 52-week high. That's interesting. Here you can get some economic data about Germany. Okay, first off, the seasonality. Here you can see that July is a 50-50 basically, whether it closes higher or lower than it opened. August and June are historically very weak, hence this is basically a weak period, but later into the year it is strong, or relatively strong. Let's compare it against the S&P 500, the SPY. So this shows us the percentage of months in which it outperforms or underperforms the S&P 500. You can see that August tends to be, weak, but then much stronger into the later part of the year. Hence, there's something about the later part of the year and Germany which is bullish. Okay, let's look at the weekly data points. This is the big picture, all the history. Here you can see the dot-com bubble, the financial crisis. And interestingly, Germany did not actually make a new all-time high. Of course, this ETF is denominated in US dollars, hence this is in terms of US dollars. But then again, we did not see a new all-time high. And you see that it moves in these very major cycles. There seems to be 3 cycles, smaller cycles within the major cycle. 1, 2, 3, 1, 2, 3, 1, 2, 3. Here there is a bit of a cycle break, but you can see here that you could make the case that this is a 1, 2, and maybe this is the third. Maybe. If it is the third, then you could make a case that we have already seen quite some decent gains. Historically, this period of the year is seasonally weak. We haven't seen that weakness yet. Hence, that's something we would expect. We are currently battling a key moving average, the red 200 week. Try, fail. Will we have enough energy to actually pull it off this time? That's the big question. So basically, whether we succeed staying above the 200 week determines whether you should be long or short Germany. But yeah, we will know soon. Here you can see 60 RSI is basically in not neutral zone, but you can see that there isn't any clear divergence here. Accumulation distribution line, it does show that there's a decent number of buyers stepping up, but nothing like spectacular happening there either, nothing that really jumps out. There's a very interesting correlation, however, with the S&P 500. There's a negative -14% correlation between USA and Germany, which means that this ETF would function very well in creating a diversified portfolio. Let's remove this one. Then you have the daily data points. Let's load the moving averages. Okay, so you do have the red 200-day moving average, which is very important. We have tested it 2 times in the rallying from that point. We have not broken out above this level yet, and after that level we do have quite some other resistance levels. But the bulls, they are actually trying something here. Something that, it could become interesting. The problem is that we do expect that seasonal weakness. It is, as we saw, it is in the autumn season, that's when you really get that strength, historical strength for this ETF. Even vis-a-vis the S&P 500. So that is one of those things to be a bit wary of. In this time frame, with these 156 last days, there actually has been a very strong correlation between Germany and the S&P 500. 97% positive, that's very strong. So they basically move together. Yeah. Let's look at some additional data. So here you can see options are available. It is shortable. That's good. Year-to-date performance -2%. That's, not that impressive. The number 3 hold. Medium risk. You can see that the expense ratio is actually 0.5%. If we go here to dividend and valuation, the PE ratio is 13 here. EVO, I think that is Spain. Let's check. No, it's Australia. FPXE, what is that? That is IPOX Europe Equity Opportunities ETF. Okay. It is on the lower end here of the PEs. That's good. So there's some value here. As far as dividend goes, I think this is the German small caps. I have no idea what FLA is. Yes, it is Germany small caps, and the big dividend is the FTSE Europe Hedged ETF. So the dividend is like around 1%, and yes, you are paid the dividend, but you can't really make... This is not like a dividend ETF. Let's look at some holdings as Siemens, Allianz, Bayer, Adidas, Deutsche Post, Daimler, which, Mercedes-Benz and the likes, Deutsche Börse, Volkswagen, many very famous companies. Look at how long this name is. Wow. Let's dive deeper. Here you can see the sector breakdown is actually very balanced. That's very nice to see. Good diversification. Very dominated by large caps, 90%. And here you can see some other metrics. Let's look at the fund flows. 6 months. There's overall like some bullish sentiment, though it's been tapering off a bit. Okay. So, to sum up my take here on Germany, reflected through the Germany ETF. The cycle patterns and the seasonality suggests that there could be some pullback on the horizon. Looking at the technicals here, we do have some resistance levels at moving averages. This ETF has a very strong tendency to move in cycles, hence this is one of those that works both for being long and being bearish. Of course you want to time the trend, but that is just the behavior of this ETF and this market. But I think that the 200-week moving average is like the big arbiter here, so that's a key level to watch out for because we have had these failures in the past. Okay, let's continue to look at some of the S&P 500 stocks. Here is Facebook, very big rally. We see here that you can see that the candlesticks are very tall, hence there is some exhaustion. This is one of those stocks that it tends to have, pullbacks every now and then to some of the slower moving averages. Like the 20-week moving average in purple is used quite frequently as a pullback level. We haven't really pulled back there yet. And this is one of those that is like, it's due just a basic pullback. At these levels here, I would feel more comfortable like being a bit bearish than being bullish. So Facebook, they do make a lot of good investments in social media. They have a strong presence. Hence, I am long-term kind of bullish on Facebook. The problem with social media broadly is that it's become this major point of political division. And I do think we will see social media platforms emerge that are dedicated to the right wing, and that will make it very salient that there is like left wing and then you have right wing social media platforms, and I think that the user base will basically just splinter. And that is now a problem that these social media companies have created themselves. So if that happens, and it certainly seems like it's happening, it's a problem of their own creation. And for me, who is into advertising, that's going to be very frustrating, because it would be ideal to be able to reach everyone on one specific platform, or a handful. Yeah, I do think that's happening. Yes, that's ExxonMobil. The next one on the list. I think we need to zoom way back here to see similarly low levels. So way back here, we actually tested the support level from 2002. So that was like a huge correction. From that low, we did see. Let's see how big of a rally we got to the high. Yeah, 78%. That's pretty significant for this big company. And this is a very liquid stock, so you have options. You know, leaps and. Of course, also shorter term options, which could drastically increase that gain. We are seeing that the bears have come back. We are below many keyboard moving averages. So there is some weakness for sure. It was a very clear speculative buy opportunity here, but now we would want to see what the bears are up to, basically, and whether the bulls have it in them to fight back. But yeah, this is a very, very nice illustrative case of how, you know, very speculative buys at the prior support level can work out pretty well. The accumulation distribution line here is showing a clear weakness. Yeah, it's a tough business. Regions Financial. I'm going through the most liquid stocks here on the S&P 500 in these videos. Because I am currently, when you are watching this, I am on holiday. But I will be back the 5th of August. Okay, Regional Financial Corporation. We have been all the way back here to these levels here from when I was literally born. I was born in 1989, so huge pullback. You had a double bottom here, boom, boom. Seems to have been, you know, a nice buy level. We are pulling back a bit, so if we pull back a bit more, I mean, it's an interesting buy level. I mean, it is highly speculative for sure. Very speculative because because when you see these major pullbacks, you know, the saying is buy low and sell high. Okay, that's true. You want to buy low, but you also need to ask yourself the question: why on earth was it allowed to go down this much? Obviously, Regions Financial is a stronger company here than it is here. It is a different kind of company. So you have to be a bit careful about looking back and being like, oh, it's a great deal. This is a different company than it was back here as well. So that's but you know, it's an interesting level. It is, just from a technical standpoint, and also because of the pullback, the valuations have become more attractive. I think we quickly are able to look at Halliburton. I remember the ticker, that's good. So Halliburton Company, here again, it's a stock that's pulled back to a key support level from the past, 2002. I mean, the things that a lot of stocks out there are very richly priced, you know, the Nasdaq kind of stocks. Here you can buy a stock near, you know, a prior low, way back. You see in a bit of a bounce. It's interesting. I think that at these levels, as a highly speculative trade, because, you know, something bad obviously happened, it's interesting. Of course, always, you know, don't fight the trend, and may the trend be with you.